Hey guys, Andrew from Apex Trades. Hope you're well. Today we're going to cover something slightly different. Not so much about how I trade. I've got loads of videos about how I trade, but this is more about just the psychological mindset that you need to put yourself in when you are trading with prop firms. I'm going to use the example of Apex funded trader funding, ATF, yeah, trader funding. And we're going to get into the things we're going to cover are really the three modes, right? And it's really important to get this down because there is a difference in how you trade these three modes. There's the evaluation stage. There's the stage where you get your performance account with trading drawdown still active, and then there's the way in which you trade once you've gotten over that stage and the kind of mindset that you need to switch on. We're going to talk a bit about building the consistency rule and how to kind of make sure that you're always aware of how to manage that, right? Because that's an important thing as well. Order sizing. So again, thinking about if you're copy trading, which I do, when you copy trade, you want to make sure your order sizing is relative depending on what account size you're dealing with. And we're going to talk a little bit about that. And so look, why listen to me? I'm just some guy off the internet, right? But I've probably steadily been building. If we look, right, I'm just going to be super transparent. So I've been paid by Apex a few times. You can see this is my plain account. And so within the plain account, I've had 5k, right? I mean, these are just affiliate payments. Alpha, if you want the best deal ever, always. That's my code, by the way. Shameless plug. But you can see here, first payment I ever received was 2k. And then the second payment I received was 3k. Not your huge amounts that you see some of the YouTubers get, but that's okay. A lot of the time, a lot of these YouTubers, they have the capital to just go nuts and buy like 20 accounts and past 20 accounts. I've been doing it more step change, and you can see here, by the way, if you look, I'll show you that performance in a second, but if you look here, this is my, so I've currently got 5 PAs, right? So you can see these PAs here, these are the 50Ks. Now for the 50k PA, you need to get over 2,600 to get a payment, right? And you can see here, I'm at 53,600 on this one. 53,696 and then 53,715, but I've also got two 250Ks as well, which you can see here. For the 250Ks you need over 6,500, right? I've got 8,576 in this one and 8,639 in this one. So these five rather, barring any kind of crazy meltdown that I have, which I'm not that kind of trader, so I would hope, I've got 5 days to trade. Actually, I'll just show you this now. So you can see there's 6 days on the 50k PAs. I've traded 6 days, and on the 250Ks I've traded 5 days. Now look, would have it that these accounts fall on the 19th, so that I will have 10 trading days on the 19th. And so the fantastic thing for me is, all being well, I'll take a 15k payout, right, which would be amazing, because I think I've probably calculated that I ran some numbers and I've put in about $3,500 in terms of cost to serve, right, which is how much I've put into the Apex system in terms of evaluations and converting into PAs to get to this point. And so, ratio between what I've put in versus what I've got out is healthy if I can get this 50k. I'm already still in profit anyway, slightly, not massively, but I've kind of figured out that there's you've got to think you've got to think about a few different ways, and these are what we want to cover, right? And the first thing we want to cover, like I said to you before, is the 3 modes, right? So let's just use mode number 1, right? Mode number 1 is the evaluation stage. Now look, if it's anything above a 50k account, like a 50k account, I'll trade it usually 5 contracts. You can go as high as 10. but I can pretty much trade that in a way where I can scalp in and out quite easily and, you know, pass them. Where I find the challenge comes on evaluations is on the bigger accounts, right? So your 150Ks and your 250Ks. For them, honestly, I'm only thinking about trading them on a news event, and you know, the way I would trade them is I would have if this was price action, right, I'd have a stop order here and I'd have a stop order there with the TP with a 15-point move. Now, if that's, you know, non-farm payroll or CPI or any kind of news event which is tier 1 red letter, I'm gonna let price swing one way or the other. Hopefully it doesn't do that choppy thing, and usually you can pass quite quickly, right? Even sometimes you can just do that straight off of the open session. You can usually get 15-20 points in one move. And so, you know, passing evaluations for me is just about that. It's not trying to be, you know, taking too long, specifically on the larger accounts. You just want to get in and get out, right? Convert them to PAs. And so evaluations are evaluations. There's no real skill set to it. It's just, you know, you have a system, you pass them, don't dwell on it. If you fail, you know, get another one, whatever it would be. Don't dwell on it. When it comes to PAs though, like the mode, so the second mode is the PA with the trail and drawdown, right? The key thing you've got to be mindful of is that trail and drawdown. And so the challenge comes in as twofold. You've got to be mindful of consistency. That's the first and foremost, specifically early on in the you know, in them 10 days that you're trying to get your PA to. But secondly, in the drawdown, right? And this is the thing that gets a lot of people. And so what you've got to try to do is take profits early, in my opinion. You know, if you can get profits early, let's just look. Let's look at how I trade, right? This is an important point. Let's go here. And let's go this month. I've only had them 6 days, so this month we'll pretty much cover up everything. So you can see on my stats here, average winning trade is, you know, winning trades is 70%. Break even is, you know, there or thereabouts, and then you about 28% on the losing trades. You know, I've had a couple of large losses, but mainly I take paper cuts early and try to get out of the trade. I'm a scalper by nature, and you can see here 180, 145, 580, 290, 75, 90, 90, 85, $110 loss, $55 loss, break even, 90, 95, 90. Small kind of wins and small losses. Then we take a rather large loss here. That's 645. Key is not to try to let it get you down, right? You know, it's the cost of playing the game. Then we have, you know, a few other things, right? Just to take this, sorry. And we have some larger losses. You can see average time 1 minute 37 seconds, 1 minute, 1 minute, 1 minute, 1 minute. We have a much longer trade here, right? Sometimes, you know, you have to hold onto these trades, and as you know, things are going down. You can see took a few losses here. Large loss there. In fact, this is, so if I just show you this here, this kind of deep dive is a little bit of a meltdown mode, if I'm honest. It wasn't perfect, but managed to not lose me head, which in times in the past I've definitely done so. And so, you know, you can see $1,000, but at this stage I'd built up quite a nice amount of not buffer, but I'd built up enough drawdown to take even like $1,000 loss, you know, $500 loss, $1,200, so on and so forth. But then, you know, take a beat, come back to the charts, nice win there. And so, you know, if you look at my kind of biggest loss was 12.75. My biggest win was 13.50. And so, you know, that's a blip for sure. We all have those days, right? You just gotta kind of let that happen, right? But try not to let it, eat into your focus. But it's about taking early wins early, in my opinion, not letting them run too much because of the drawdown, and taking losses even earlier. I call them paper cuts. I call them paper cuts for everyone who kind of follows, because kind of a paper cut feels nice, right? A paper cut feels okay. It doesn't wreck your psyche. If you're taking large losses in trading, that absolutely wrecks your psyche, and that's the thing that you're trying to avoid. So depending on how you trade, more often than not, I'm scalping. In fact, I think, in my opinion, the way prop firms, specifically on trade and drawdown, they almost force you into that kind of mentality of scalp trading, because we can't afford to hold on to trades too long, because the drawdown will kill us. Even if we've gone into nice profit, specifically if we're dealing with trade and drawdown, it's going to come back and get us, right? So take your wins early, take your losses early, and don't dwell on it. Move on to the next trade, right? Specifically when it comes to New York, you've got a lot of movement there, and that's why you can afford to kind of be in and out, wait for that setup. Now, the third mode is the mode that I'm currently in, right? Which is all of these accounts are past the trade and drawdown threshold. I no longer have to worry about that. And so how does that change the way I trade now? Well, the honest truth is it removes a lot of the fear of holding trades. So, what I tend to do is when I get into a trade, as soon as that goes into any kind of profit, all I'm doing is putting my stop loss at break even, slightly in profit maybe, because at that point it doesn't really matter. It's a shot to nothing. You can't do that when you are in trade and drawdown, because even if you go into profit and price starts coming back against you, that's going against your trade and drawdown. But when you are in that profit mode where trade and drawdown no longer accounts for it, you can quite happily sit with one contract early doors and let price do its thing. If you get stopped out at break even, doesn't matter. It's just a break even trade at that point. And so you've got to think logically about how that affects your trading versus when you're trading with trade and drawdown, because trade and drawdown will catch you. So that's the three modes: evaluations and trade and drawdown. Evaluations, you just got to get them out the way, right? They are a shot to nothing, in my opinion. We've all been there. We've all done the full port. We've all done the the quick trade, or just aggressive. Just get them over the line. Trade and drawdown, take your wins early, take your losses early. Just try to keep building and building and building. Be mindful of your consistency rule. What is the consistency rule? That's a good point that we just need to touch upon, right? So let's say I'm trying to get to the the magical 2,600 figure on a 50k account, right? And let's say one of my days I've had a bumper day and I've had $1,000, right? There's $1,000 trade on one of those days. So what I've got to do is, because that day is the profit. So remember, when you go into Apex, your PA account chart at the end of the day, once Apex has updated the system, it will show you what your daily profit was, right? So you've got to take that daily profit. So in my case, let's use an example, right? My P&Ls, if I take this profit, right? So let's see, that was $812.02. So let's just say $812. That was across the three accounts, copy traded. So what does that mean for my consistency rule? Am I under my consistency rule? The biggest trading day I've had across this account actually was this here, right? That was 969. That was $993 on a 50k PA. So that's the biggest trading day I've had of this cycle. So how do I work out my consistency rule now? How do I work out that I haven't gone above that threshold where I may get denied payout because I've breached that threshold? So we've just got to make a simple calculation, right? $993. Let's get our calculator out. And we're just going to put in, what was the number? $996. And we're going to divide that by the consistency, which is 30%, right? So 0.3. Now that tells me, in order for me to get my payout on the 10th day, I have to have over $3,320 in those accounts, and then I will make sure that I no longer have to worry about the consistency rule, right? So as you can see, 53,696 is above 3320, fine. 715 is above 320, and then 687 here is above 320. So we're above that now. But what does that mean if you want to try to work that out the other way around, right? And so let's say the biggest 50k PA we have is 53,715. So I can do it the other way, right? I can go 53,715, but instead of it in divide, I can times by that consistency, which is 0.3 again. Now this is going to tell me what's the biggest amount of money I can make in one day on that account, which is, well, let me just do that again. 3,715. Well, all I'm taking is the profit, right? That 317. That's my P&L. So multiply that by 0.3. So I can't, my current trading days, I can't go over, in terms of pure net P&L profit, is $1,114.50. So that's the consistency rule, dead straightforward. Obviously what that means is the more you build up your accounts, the bigger your consistency amount can be as you go on. So for example, if we look at the 250Ks as an example, right? So what's the max amount I can make on these ones? So let's say the biggest account here is 8,640. 8,640. Biggest amount of money I can make in one day on the 250Ks based on my current P&L is $2,592, right? So that's, again, biggest day I've had on the 250Ks is 2,167. So we're good, right? So it's just knowing how to kind of manage that and not let that kind of come into your head, right? Because the moment you start thinking, oh, can I take this? Can I go too high? Can I get all that kind of stuff? Messes with the psyche, right? And it's what we're trying to avoid when we're dealing with these accounts. So consistency is key, but equally, you know, knowing what your moves are or where you can kind of trade in terms of your, you know, your highest net value is also going to help you out. Next things we're going to cover is order sizing, right, which is another really important psyche kind of thing. So you can see here, right, this is Tradeovate, and this is what I'm using to copy trade. I trade on a Mac, so that means that I specifically only deal with, I don't have a copy trader, right? So if with Windows, there's Replicanto, there's the Apex copy trader. There's all these different ones. I only use a Mac, right? And there's not a lot of options. However, I don't think the Tradeovate one is bad at all, actually. So I have a number of groups. So this one is my all accounts group. And as you can see, what I will do is the first 3 accounts are my 50Ks, and the next 2 accounts are the 250Ks. And the way I trade it is I'll have one contract set on the 50Ks, and I have 3 contracts on the 250Ks. So it's orders of magnitude 3 times, right? And so what I do is, you know, you just add them all up together, right? So that's 3, 6, 7, 8, 9. It's not 5, but anyway. So I have 9 in that box, and if I apply 9 there and hit market bid or sell at ask, it will put 1 contract on the 50Ks, and it will put 3 contracts on the 50K and the 250Ks. Now, one of the things all traders get discombobulated with is seeing big numbers, whether that's to the win side or whether that's to the downside, and that can oftentimes cloud judgment on when to take a loss, when to take a win, and that's because the numbers are magnified, right? So what I do is in view, I will have the 50K in view, right? So when I hit buy or sell, what I'm actually doing is only showing here what the value of the 50k is with one contract. In the background, however, the 250ks have got 3 contracts applied, but I just think I would probably be more nervous looking at a trade that's going 3 times as high or 3 times as low as what it would on a single contract trade. And so whilst this is nothing special, it's just a way to kind of manage your mindset when you're trading with groups on how you trade. So I just specifically deal with that one 50k account. It kind of keeps my mind in check when I'm kind of trading day in, day out, and not worrying too much about the larger numbers. And you know, the 250ks will look after themselves, right? If I'm not focused too much on the figurative side, and I'm just looking at the candles and the chart, and I'm not really seeing the noise from big numbers moving up and down on those 250ks. Some people are great with that, by the way. Some people can really just like blank that out. I think probably professional traders, hedge fund managers, they're dealing with this kind of stuff all the time. Like, but as a retail trader, you know, sometimes the numbers, when they start to magnify up or down, can force the wrong kinds of mentality, right? And you want to try and stay away from that. So in a nutshell, they're kind of the tips and the kind of ways in which, you know, I think you as traders should also be applying yourselves to. You know, it's hard enough with the stages. I think the evaluations, once you get past them, that's great. You know, you're flying, aren't you? You've got your PAs. What a lot of people try and do, and probably is wrong, is to, you know, rush them. You know, what I do is I have a set figure in my head, basically roughly around the consistency, and I'll push it to that if I can. But the other thing as well is there's one more tip that I thought was important, right? It's recognizing a key distinction between something. When you are trading in the pocket versus over trading, right? And so sometimes you'll hear, you know, I'm trading too much. I feel like I'm taking too many trades. What you should push it if you are in the pocket, in the zone, right? And how do you know when you're in the zone? It's instinctive, right? You just get this, you get this vibe, you get this feeling that everything you touch is turning to gold, and that's okay, right? To not, but always, you know, be mindful of the fact that you got to keep yourself in check, and that means rigorous risk management. So even if you are in the pocket, right, you're not going to get this big death candle that's going to come and wipe all your gains out. Always risk management is key, right? I showed you earlier on my accounts, taking small losses. Even me, I have a little bit of a blip here and there, but generally I'm okay. I can take paper cuts and it not ruin my psyche. But when you're in that zone, keep pushing it, right? It's not a negative, and it's not over trading. Over trading is when you start getting losses, and those losses become bigger, and then you start getting that meltdown face where you're trying to push and you're thinking, oh, I've got to win this back. That's over trading. In the zone is win after win, little small loss, another big win. You know what I'm saying when I'm talking about trading in the zone, of getting that feeling of you're reading the market really well. Don't stop, in my opinion. Just keep pushing. If you hit a consistency limit, that's fine. You're done for the day. But know that difference. There's a distinctive feeling that you get when you're trading in the pocket, right? And it's hard to explain, but you just know that everything you're doing is right, and you've kind of got the tail of the tape, right? You just feel it. There's no other way to kind of express that, but you just know when you're in that zone. Know also there's the limitations and the feelings you get when you're over trading. The moment it kind of starts getting erratic, and if there's that gambling kind of mindset in your head, or you're no longer sure which way the market's going to go because of, you know, a level or whatever else, time to take a rest. Do you know what I mean? And, you know, every day that's a green day is a great day, irrespective. Specifically when you're over that threshold, it's a great day, right? Even a small loss day is not a bad day. It's really not. And that's a difficult thing to kind of reconcile your mind to, but it's not. It's just trying to limit those losses to keep them small, and recognizing that. So if you've got any tips, anything else that you guys do in terms of how you would, or how you manage prop firm trading, you know, let me know. But that's how I've been managing it now. As long as I keep my head sane for the next 4 or 5 trading days, I should be hitting a nice 15k payout. Hopefully, my plan is to, you know, keep things tight like I have been, and try to build these to a little bit of a comfortable buffer. There's already a comfortable buffer on the 250s, not bad on the 50ks, but I'd like to get over that 4k, maybe even into the 55k range, because that's a nice zone to be in then, because that kind of gives you a really nice buffer. And so that's it really. But let me know what you think. Anything you would add to that? Anything you would take away? Would you disagree with any of that? You know, shameless plug again. Use my code Alpha. Link is also in the description if you want to get some discount from Apex. Also, building a really nice community of traders within the Discord server. I probably trade live a lot from my Discord server, not so much on YouTube, but live in the server. So if you want to see how I trade, head over there. And yeah, I'll see you in the next one.